Good afternoon. This is Josh Mindlin here at Chaikin Analytics, and I'd like to welcome you to our presentation of Discover and Time Swing Trades and Options, secrets to pinpointing entries and exits. Presenting today is Joe Boccella, Director of Client Success at Chaikin Analytics, along with John Schlitz, Chief Market Strategist and author of Chaikin Morning Insights. Please submit your questions throughout this webinar using the Zoom Q&A window, which you'll find in the upper left-hand corner of your screen. This webinar is being recorded and a copy will be sent to all registrants. To get us started, here's Joe Boccella.
All right, Josh, thank you so much and welcome everyone. Before we get started, just want to make sure everybody can see my screen here. Hopefully it seems to be in good shape. Great. Well, first off, I want to thank everybody for taking some time out of your afternoon to join me. John and I both have a lot of exciting material to get to and share with you. Today's presentation, of course, is all about swing trading. As I'm sure a lot of you already know, swing trading is very, very exciting. It's really fun because you can make a lot of money in a very short period of time. That's what I've found over my time here at Chaikin Analytics, the reason that a lot of people like to gravitate to it. So with Chaikin Analytics, what we're going to show you today is how you can make a lot of money, but also have a little bit of fun as well. So let's go ahead and get started. First, I want to tell you just a little bit about my background. My background before I was at Chaikin Analytics, I got started out at a fantastic company called the Vanguard Group, where, of course, if you're familiar, the buy and hold mentality is king, which is fair in a lot of cases. I'm not here to criticize buy and hold. Vanguard also preached while I was there that it isn't really possible to consistently pick stocks and beat the market. I found this to be very mysterious, and I wasn't really satisfied to just kind of have that be my own little solution here, just to kind of leave it at that. I wanted to learn more about how the market actually works. This led me to studying all about how to analyze fundamentals and technicals, and I can see that there were a lot of people on one side of the fence or the other. Eventually, I found out about Mark Chaikin. And I learned that he was actually running a company just a mile away from where I was at Vanguard. Fate would have it was that right around the time where I met Mark, he was looking for someone to start up his coaching and education department, something that I'm very, very passionate about. So I think the two of us mixed pretty well. Now that, and of course, this was all great timing because he had just released his brand new stock analysis platform. So having had the opportunity to learn one-on-one from Mark, as well as from John Schlitz here, and I think you are going to learn a whole lot from John, just as I have during the next 45 minutes to an hour. But learning everything I have has allowed me to kind of exercise the mystery about the market. It's also a lot of fun for me to now coach hundreds of investors and traders and how to confidently find the right stocks, and also to take the mystery out of entry points as well as exit points. So a lot of exciting stuff to get into here. I want to bring my colleague John Schlitz on. John, why don't you take a moment, go ahead and introduce yourself.
Okay, Joe, thanks. Good afternoon, everyone. Just to give you a little background that you can't see on the screen, I worked at Lehman Brothers for 15 years, the good years, not the bad years, where I traded equities on the institutional trading desk and was also the main technical analyst for the equity trading floor. I was also a member of the proprietary trading group, which was basically an internal hedge fund, which traded the firm's capital, not outside capital. In '96, I joined Mark Chaikin at Instinet, which is also an institutional broker, where I was the chief technical analyst for about 17 years. And then 3 years ago, I rejoined Mark at Chaikin Analytics, where, among other things, as Joe mentioned, I write a daily research note called Morning Insights, which hopefully helps the client or clients get the most out of the system, and also shows them how to combine technical analysis, since that's what I am, a technical analyst, with the Chaikin system. And that's mainly what I'm going to be focusing on in a little bit.
Awesome. Thank you, John. Okay. So as they teach me in courses about delivering presentations, let's talk about what we're going to talk about, again, for about the next hour or so. First, what we're going to cover is the Chaikin specialty, the Chaikin classic bulls and bears. The reason we need to start here, of course, is to learn all about what our program is about. But of course, this teaches us a lot about what we need to know about swing trading. Then what we're going to do is we're going to dive into the mechanics of a swing trade. The reason for this, of course, is because there's a lot of different ways to define a swing trade. So what I want to do is I want to talk a lot about what it makes, what actually generates a swing trade opportunity, so that we can begin to identify future opportunities for swing trades. Of course, timing plays a huge role when it comes to swing trades. So we're going to show you, and we're going to tell you about our proprietary indicators, things that you can't find outside of Chaikin Analytics, things that, of course, we've created in order to help you improve your entry points and your exit points. And then finally, once we know how to spot a great swing trade opportunity, once we know what a great setup looks like, what you're going to realize is that you're going to know how to avoid other types of setups that essentially would become landmines, those losing situations. So we're going to talk about those situations and just talk about why it's just not worth the risk. So avoiding and recognizing landmines. Now, the Chaikin name is something that I'm sure you're all familiar with from one source or another. Who I hear from the most are people who have seen Chaikin Money Flow or the Chaikin Oscillator on other platforms. Now, we're here to talk about the Chaikin Power Gauge rating. And I want to clarify that, of course, is from the same original creator, from Mark Chaikin. So there is an association there. I know some people aren't too sure if we're the same group. We are, though. Some of the companies on the page right now are just some of the more notable institutions that we've partnered with, that you've seen our name on before. In particular, CNBC here, I always kind of get a little bit of a laugh out of this sometimes. Mark made an appearance on there after the July 4th holiday. And at the time, there was a lot of talk about Disney, the stock Disney. The hosts on the show were concerned about Disney's size and if they had accumulated way too many different legs of the company. And they were kind of speculating about if the company would have to begin spinning off different parts of the business. But I remember Mark, with his quick thinking, out that Comcast is a very similar company, a very similar structure, but that stock had been doing much, much better. I always think of that as a great example of the kind of quick thinking that we like to advocate for, and what you're going to see in our program, because we're going to be looking at very similar situations later on. So just a really funny story that I like to think of, and I thought made a great impression. So let's see. Let's get into some of the challenges here. I have the first poll question that I wanted to go ahead and put up here. So I want to talk about some of the challenges, the most common challenges that people encounter when it comes to swing trading. After all, again, I'm really not, I'm totally blanking on the right word here. I'm not kind of sugarcoating when I say that I work with hundreds of traders. And so I hear from a lot of people about a lot of those common challenges. So I'm going to go ahead and put up a poll question here. And if you don't mind taking a moment and check off as many of these as you'd like, but tell me what you relate to when you see each of these different factors on the page here. Timing, you may have already picked up. We know that that is a big one, a very, very big challenge that we hear. So timing, whether it's entries and or exits, stock selection, of course, just trying to find a stock that's heading in the right direction. I know a lot of people can get stock ideas, but being successful with your which stocks to go with is a tough one. I saw the very first response already was not enough time in the day. I know that is a big, big challenge. Just being able to find the amount of time that you need to go through all these different examples and data and ultimately make a decision, how to get your timing right. That sometimes without the right tools, it takes a lot of time to do. The market, right? That's a pretty big one. You're concerned about the condition of the overall market. There's always a reason to be worried. And I think right now there's no shortage of ideas. Don't have a strategy. That, if I could speak on behalf of most people, that is a big one. If you don't have the right strategy to follow. And then finally, maybe you just don't think you don't believe that you can actually beat the market. I think it's a fair one to give a little attention to. So thanks everybody responding. It looks like it's all about half the responses from everybody. That's just great. And have to admit, I'm not surprised to see this, but it looks like timing Entry points and exit points is the big one. So I'm glad you're attending today's webinar. This is definitely one of the bigger challenges. You will also learn about stock selection today. You will also learn about a strategy today. You will learn, of course, about finding the time in the day with using the right tools. And also we'll give you a little bit of context for the overall market. But the beautiful thing about swing trading, of course, is that you can really be successful in any market. So thank you all very much for your responses there. All right. I want to give a little attention to information overload. Two of the more common challenges in particular we hear about is information overload. And I want to give some attention here because there's just simply so much content out there. I think we can all experience this one. We all can relate to this. Again, I think back to my time at Vanguard where indexing was enough, but I wanted to kind of exercise some of the mystery about the overall market. And it was very, very difficult to do that because there was just so much information to look at. Probably because we had the TV on all day, and when you put on one of those networks that focuses purely on finances, they always have to have something to talk about, whether it's relevant for what the market's going to do or not. So just being able to pinpoint all of that information, try to make sense of all of it, is a challenge in and of itself, and it's a pretty common one that we hear. It was a little bit of a spoiler. I'm about to show you a solution for this. The other one, of course, as you've all just referenced, is, of course, timing. This is the first time I've used this slide, this kind of graphic, and I really felt I had to show it because the words written on here, timing is everything. Well, when it comes to swing trade, timing is everything. If you don't have a sense for timing, you can do poorly no matter what kind of direction the stock is going in. So timing is absolutely critical, and I had to give some attention to that here. So now those are the problems. Here is the solution. The solution, of course, is our Chaikin Analytics workspace product. This workspace consists of everything that you need in order to cut through the clutter of the market and the clutter for individual stocks, which will allow you to keep your attention on what's most important for you to make money. That's what we're here for. Now, how we do this, why we help with swing trading, is because we provide a directional edge. Again, we're looking at a lot of complex, diverse material, fundamentals and technicals. This is what we're using in order to give ourselves a direction. We combine these into a quantitative model. So there's no expert behind the screen picking stocks. And that's, of course, we have guidance from Mark Chaikin and from John Schlitz, but of course, it's this quantified model that is what we're following here. So rather, we focus our attention on the factors that actually drive the direction of a stock. We use this this sum result of all this analysis to point us in the right direction. By having a directional edge, you'll now be able to determine which stocks are about to break out, and also which stocks are going to continue in their trends. I think that's also very, very valuable, and we're going to explore that later on here. Those of you who mentioned that you're looking for a strategy, in one illustration, this is it. So, and I always like to think too, using a strategy, it's like a lot of things in life. You need to have a reliable strategy, because it's not just limited to investing or trading. But with that said, it's certainly necessary for trading in order to be successful. I'm sure many of you have had winning trades. I'm sure you've had at least one or two good trades that have worked out for you, whether you're following a strategy or not. But I'd be willing to bet that most of your trades, if you're not following a strategy, probably haven't worked out for you, if you're not being consistent. So what I like to follow, of course, it all begins with the power gauge rating. Is the stock bullish or is it bearish? Then I like to take direction from the market. Should I be focusing on the bulls or should I be focusing on the bears? Then I'll fine-tune my analysis by using factors such as Chaikin money flow, Chaikin relative strength, along with our very helpful buy and sell signals to eventually make a decision. So eventually to take action. Now, a little bit of a teaser. I have a mystery stock on the page right now. Let me know if you can guess this. If you're looking at this pattern, if you're a chartist, if you're someone who is a technical analyst like John Schlitz, if you think you can recognize this stock, go ahead and type that into the Q&A window. As Josh mentioned, you can see the Q&A window in the upper left-hand corner of your page. So I wanted to show you a hands-on example right up front for what we're really here for. Mark gave me this idea yesterday while I was going over ideas, and he said, throw him a teaser early on. Let's talk about what we're really here for. So I thought this chart was great. So like I said, I blocked out the name and the ticker of the stock because I really want you to focus on the price trends and the charts. Look at what you're seeing here throughout the page. Obviously, we're in the upper left-hand corner and we're ending in the bottom right. If you were to quickly look at this screen, the one color that you'd probably notice is red. A lot of bearish ratings. We have to talk about what all of this means, but hopefully you can get the idea that there's a pretty significant bloodbath going on here with this bearish rated stock. So I want you to see the continuous downward spiral this stock has been on. And given how red all the indications have been, I want you to see how this is predictable. It's not a surprise to see this stock go from one low to a new low to a new low to a new low over and over and over again. So we'll come back to this one later on. I'll reveal. I won't keep the mystery going for too long. And since we're here for a swing trade, I want to show you a bullish example as well. Again, if you think you know what this bullish example is, go ahead and chat in. I see a lot of you found the Q&A window already. So go ahead and chat in if you think you know what this bullish example is. Because as Mark said to me yesterday, bullish, bearish, or let me rephrase this, bull or bear, we don't care. When it comes to swing trading, we're looking for a directional advantage. And I think these two charts really get the point across. We've been using these stocks. I'm sure if there's any current subscribers on the line, you probably recognize these because I've been using these as learning examples pretty much all year long. And I want to teach you about why these are so great. Someone who agrees about how awesome and how great these stocks are, just these two examples, is John Carter of Simpler Trading. John is over the course of the years, we've been fortunate enough to form a number of great partnerships. One of the most notable ones, of course, has been John Carter and his Simpler Trading service. We actually received this testimonial from him after about only a month of him using the program. What I really love about his comments here is that he points out the value of having a blend of factors. Combining not just focusing not just on fundamentals, not just on technicals, but a combination of these 20 factors. If you can't tell from those past two examples, just as Jean mentions here, what this is truly an objective awesome meter, right? I love that word there, objective. This is non-biased. We have Chaikin Analytics. We don't benefit if you trade mostly bulls or mostly bears. We benefit if the stocks that you focus on do what you expect. I think you're going to see a theme here throughout our session that your success is very much our success as well. And we want to make sure you can be very successful. So we're very glad to have John Carter as a partner along with his group. So big kudos to him. So about this power gauge rating, here is the rating itself. We're going to look at Lamb Research in a moment here. But these are those 20 factors. Again, a blend of fundamentals, which make up the financials and earnings, and of course your technicals, so technicals and experts here. The greatest thing that this rating system has done for me and for thousands of others, not just the people that I've interacted with, but thousands of others, is that it's taken the mystery, again, out of the stocks. Think back to information overload. Think about how many factors you look at each day for just one stock, right? Whether it's Apple, maybe you're distracted by the new iPhone release. Maybe there's concerns about cybersecurity. I mean, you have to think about that for just about any tech stock. Well, what we've done is we've cut through the clutter. More specifically, the fact that we've identified these 20 factors as the most important ones to follow, the ones that have backtested and shown that they lead to a directional advantage for a stock, is a huge win in and of itself. Just being able to point out those 20 factors, I think, is one of the biggest advantages for this program. When you consider that all of these factors are being rated, compared against one another, balanced against one another, and gives you a single overall rating, this is really where the magic begins to happen. You realize that there's nothing else like this product, like this rating system out there on the market. Again, another great illustration here of cutting through the clutter. I really like this visual a lot. If only just for the reason that it's a reminder that there's no more tables to dig through. There are no more calculations that you need to generate. The work is already being done for you. take a second to think about how much more time would be put back in your day. So for those of you who mentioned, responded to that poll question saying you don't have time in the day, think about how effective it would be to have that much time put back in your day instead of digging through tables anymore. A phrase that I hear very often from a lot of our market veterans is that, gosh, I wish I had this 20 years ago. Where was this 20 years ago, 20 years ago, 30 years ago, however, 10 years ago even. Think about just how much more time is going to go right back into your day here. So pretty fair question to ask. So how do we know if this works? It all looks good. I love the idea of it, but does it work? The answer is yes. It does work, and it works very, very effectively. What I'm showing you right now are the back-tested results for all of 2016. Now, 2016 across the market was a great year, especially following the election results. And you can see how the market really gapped up there. What you see here is that the stocks with a bullish or a very bullish power gauge rating, though, consistently outperformed the average stock, outperformed the neutrals, and it certainly outperformed the bears and the very bears. Speaking of those bears and neutrals, imagine what your results would look like if you only focused on, let me bring in my drawing tools here. Imagine if the only stocks that you bought calls on or bought equity in were just these bullish or very bullish rated stocks. Think about the probabilities involved there for your success rate. At the other end of the table, imagine if the only stocks that you shorted, imagine if the only stocks that you bought puts on were the ones that underperformed the market by the greatest amount. This is really the tip of the iceberg when we talk about a strategy, by positioning yourself for success, putting yourself in the right place at the right time. So it didn't just work for 2016, it also worked for 2015. And again, to recycle the phrase here, bull or bear, we don't care. This is absolutely true of 2015, which is a much more difficult year in the market. Again, this is where indexing isn't going to do you very well. 2015 is a completely lost year. This goes back to allowing the market to point you in the right direction. And I think it was pretty easy. If you can think back to 2015, my first year with Chaikin Analytics, the only people who were making money were the people shorting, unless you were, of course, catching the rebound. But clearly, if you were shorting, you were doing very, very well here. And even if you were looking bullishly, if you're focusing on bulls and very bulls, you're still doing better than most stocks out there. So this chart really makes the point that you don't need to make the same number of bullish trades as you do bearish trades. In fact, you'd rather follow a strategy where the only trades you need to be making are the ones that are the market is pointing you in direction for, because that is the best way to allocate your trades. To really put a cover on all of this, for our back-tested results here, you're seeing for the bullish, how the power gauge rating is done throughout the bull market since 2011. As you would expect, again, same pattern here. This staircase of going higher and higher and higher as you go from bearish to bullish. Bulls and very bulls have consistently outperformed, while bearish stocks have underperformed. So what I'm asking you here is allow Chaikin Analytics to be your GPS for stock selection. This can be quite effective. You wouldn't be the only ones using Chaikin Analytics to be your GPS for stocks. Two of the most noteworthy, most well-respected institutions in the country use Chaikin Analytics for stock selection. The first of these is the relationship we struck up with NASDAQ several years ago. What this consisted of is we took three indices that NASDAQ already had in place, one for large caps, one for small caps, and eventually one for dividends. And what we did was we pulled these indices, applied the power gauge rating to them, and then we just phased out a lot of the bears and neutrals, the stocks that we didn't think were going to do well. As you can expect, all three outperformed their NASDAQ benchmarks. Now, we showed these results to New York Life. New York Life came along, and this led to the launch of our ETF. Now, I have to be clear here. I'm here to talk about the, I'm not here to talk about the ETF. I'm here to talk about the power gauge rating. I just wanted to share this story with you as an endorsement for the effectiveness of our power gauge rating. So these are two of the country's two biggest heavy hitters relying on the power gauge rating, along with, of course, thousands of subscribers who are already using the Chaikin power gauge rating today. And this is something that we're very, very proud of. Now, I'm talking a lot about making money. I'm talking more about putting time back in your day. One of the best side effects of Chaikin Analytics is a better night's sleep. So going back to August 2015, Jim Davidson sent us an email here, decided to take advantage of Chaikin Analytics. What it really offers is a better night's sleep and some impressive returns. Rather than swinging for the fences, we're going to talk about taking chances later on today. I've learned to do what the system tells me and enjoy a nice 16% return. I believe he was just buying stocks as opposed to trading options. So thanks to the Chaikin team. We very much appreciate this. Glad to know the confidence is back again. That's a big one here. All right, so here's what we're going to dive into examples now. Here's what you're about to discover. We're going to go ahead and spot high probability turnaround points, which you can use for swing trading. All right, so we're going to cover a lot of these coming up soon. We're going to bring John Schlitz on in a few minutes and cover a lot of great examples. We're going to find out how you can choose whether it's better to think bullishly or think bearishly. Again, I like to focus on stocks that are bullish or bearish, and then just have the market tell me what direction to go in. It just takes so much of the work out of the equation and makes trading a whole lot easier. And then, of course, I'm going to show you how to find ideas for swing trades in either direction. So, okay, where to start, what to buy, Chaikin Classic Bulls. So what this consists of, we're going to look at some of the key factors here. Your power gauge rating, that 20-factor model. We're going to look at relative performance versus the market. We want to make sure that the stock's beating the market. Remember, those bullish rated stocks didn't just experience growth. They outperformed the market. And then, of course, we're going to rely on the direction of institutions using Chaikin money flow. And, of course, we want all of this to be consistent and strong. So my classic bull example here for today is Lam Research. And look down at the bottom of the page here. In the platform, you can see the stock rating. Now, Lam Research, of course, being a tech stock, the tech sector has done so well this year. It's been pretty volatile at times, especially yesterday, right? I know a lot of tech stocks kind of got roughed around a lot, but we've seen them recover time after time. But what's great about Lam Research is not only did we help you get into this stock, you can see one of our buy signals about 12 months ago. But if you look at the bottom, the power gauge rating for the stock has been bullish nearly all year long. What the power gauge rating is doing here is continually giving you an idea for whether the stock is likely to continue to grow. Bullish about a year ago, maintains that bullish power gauge rating, and so therefore you can draw the conclusion, you know what, even through a little bit of a pullback here, sometimes during the shorter term painful points, you can continue to expect growth. This is what we mean by a directional edge. So power gauge rating playing a critical role here. What do you want to sell? What do you want to short? What do you want to buy puts on? Well, this is going to be the same criteria, just made bearish. Power gauge rating, bearish power gauge rating, not a neutral rated stock, a bearish one. Look at the weakest ones to pick on. Relative strength, how is it doing versus the market? I don't want to just short the market. Again, in 2015, you could have shorted the SPY, or you could be shorting the weakest stocks out there. And then, of course, institutional trends, or institutions buying or selling. My example for you here today is General Mills. And General Mills, not just yesterday, a lot of you are probably following General Mills because of what we saw within the past couple of days. But before you look up here, look at the power gauge rating down here. Bearish November, December, January, February, March, April, May, June, July, August, September, and probably going to be October here soon. And what do you notice right above it? Just more red, right? Even more and more bearish performance. Underperforming the overall market, bad things happening to bad stocks. So again, and of course, again, I know General Mills was in the news a couple of days ago with a weak earnings report. So again, it may have been a surprise to some, but it wasn't a surprise here at Chaikin Analytics. And again, the most important thing here is by focusing on bearish rated stocks here. One other classic bear that I want to sneak in here, this is actually a suggestion from John to show Mattel. Again, another Mattel, I believe, if not mistaken, a toy manufacturer. The child in me cried a little bit when I saw that Toys R Us had filed for bankruptcy, which I know is sad, but fact of the matter is that there are opportunities to profit here. When you look at Mattel here, obviously a manufacturer getting hit pretty hard along with that news about Toys R Us. When you look at it across the board, bad things happen to bad stocks. Just overwhelmingly bearish power gauge rating, very, very poor relative strength versus the overall market. And so you can come back here for swing trades time after time after time, right? So, and just an overwhelming slump back here. And again, you can see a little bit of money flow coming into play here. I'm going to save the conversation for money flow for John here, but again, a pretty easy depiction of an opportunity here for Mattel. So fast and efficient. That didn't take too long. I think a lot of you probably caught on very well with a lot of those examples. Very fast, very efficient process when you have something like the power gauge rating. Had an average of 90% return in my first 6 earnings trades using options play. You just saw some great earnings trades for Mattel. More of that to come. Using options play in the earnings feature. We have more to talk about for options later on. All this is very simple trades. Chaikin Analytics, we're making the process very fast and efficient, putting time back in your day. I know I'm saying that a lot, but it is just so valuable. So instead of getting bogged down in due diligence, I was trading. So and you can see with the proof here from Mark. Nice little scorecard. I recommend everybody here does that as well, by the way. That's something that we really coach our users to do. Keep track of your trades so you can be consistent. So this is a wonderful, wonderful illustration of that. So one last one. I love talking about Sun Edison. Again, bad things happen to bad stocks. Does anybody remember Sun Edison? If you do, go ahead and type in the word yes into the Q&A box because some of you may not remember Sun Edison. The reason why is, well, they're not around anymore. Filed Chapter 11 a little bit more than a year ago. But again, did not catch Chaikin Analytics off guard. Power gauge rating here. We're about to talk about our dynamic duo, going from neutral to bearish, relative strength, outperforming the market, now underperforming the market. And this cycle over and over and over again, repeating. So just great, more and more buying, more short opportunities. And again, it doesn't matter whether it's bullish, whether the market's bullish, whether the market's bearish. Focus on these weak opportunities. You can do very, very well. So if I had Chaikin from Edward here, I bought Sun Edison at $15, doing a little bottom fishing. So let's see, where was $15 on the chart here? Right around where we circled. We were putting out sell signals while Edward here was buying. Bought $15 from my firm. Merrill Lynch was still recommending. If I'd been using Chaikin Analytics, I would have saved a lot of money and a lot of pain. You can see the downward cycle here. So why? I mean, I'm here to tell you to short Sun Edison and stocks like Sun Edison, let alone avoid buying them. I'm going to go ahead and state the obvious here. I certainly don't want, I hope nobody's here interested in, hopefully nobody has any bears in their portfolio right now, but this is very well what could happen. So, okay, dynamic duo. We're going to go ahead and bring John Schlitz back here to talk about the dynamic duo. This, of course, is what we're talking about when it comes to the Chaikin power gauge rating and relative strength. Relative strength, again, is a standalone indicator for both bullish and bearish trends. Superior returns come from stocks that outperform or underperform the overall market. So, John, if we have you back here, let's go ahead and start with NAV.
Okay, thanks, Joe. Before I go over the charts, I just want to mention that one of the toughest things that technicians like myself have to determine are the odds for a stock either breaking out or breaking down, or also we have to attempt to confirm whether a breakout or a breakdown is valid. Most technicians just sort of follow the textbook guidelines, which is to look for a jump in volume on the breakout and then have multiple closes above resistance or under support. They also just assume that if a consolidation pattern is occurring within an uptrend, that it will eventually be resolved to the upside and vice versa in a downtrend. If you watch CNBC at all, you probably heard Carter Worth 1,000 times say stock went up, pulled back, and we're making the assumption it's going to go up again. They make a lot of assumptions like that, or sometimes you hear, well, a trend is in force until an equal or opposite force stops it, or we're going to stick with it until it simply stops. So that's really just not enough, and it's not that simple. But the indicators that Joe was just talking about, they can be very helpful in estimating those odds, especially when the price patterns are well defined. And here we have an example of a stock that was trading sideways for about 10 months. And actually, I just want to talk about money flow for a second. Just so you know, money flow measures what the institutions are doing, whether they're accumulating the stock or feeding it out for sale. They can be aggressive, as you know, and really impact the price of a stock. But normally, their actions are typically not noticeable in the price because they're conducting their operations very gingerly. They don't want to tip anyone off to what they're doing, because if they're buying, they probably have a lot more to buy, and it's going to have to, you know, occur over several days or several weeks so that they don't impact the price. But very often you can see what they're doing in the money flow indicator. So keep that in mind when we talk about that. All right, so we have Navistar, and oh, one more thing. There's a lot of information on these charts. Try just for this drill to focus on what we're pointing out. There's many other things on the charts that we could have highlighted that worked, some that didn't. But right now we're showing you how if you use a chart with a good price pattern and you wait for the evidence to be compelling, then it usually works and, you know, works out. There's, as I said, there's other ways to use it, but try not to lose focus on all the other situations that are going on. So we have a 10-month sideways pattern. So it goes up towards the top of the pattern, and make believe for a moment that there are no indicators down below. So the technician's looking at it and he's thinking, okay, I have to decide whether this is failing to get through a resistance level or cooking and, you know, just getting ready to break through. And if you're just looking at price, it's pretty hard to tell. But obviously, if you look down below, the first red-green oscillator, as Joe mentioned, is money flow. And you can see that starting in early August, money flow flipped positive and then stayed there. And when that occurs, when price is consolidating right underneath a breakout level or a potential breakout level, that's usually a good sign that the stock is under accumulation. If we're lucky enough to be able to buttress it with a positive swing in relative strength and also a bullish power gauge rating, then it just makes the odds that much greater. So these are the types of setups that we look for. And it's, you know, they're very helpful when you're trying to determine, you know, because anyone can wait for the breakout. And actually, if you do that, if you're a little more conservative and you do that, it's not that the system isn't helpful, then it's actually still very helpful because you can continue to use money flow, relative strength, and the power gauge to confirm the breakout. And that's very useful as well. If we take a look at the next stock, it's very similar. Okay, you have a sideways range, then you get trapped in the top of the range. That in and of itself is pretty bullish. We look for that a lot. But then we also want confirmation that the institutions are anticipating a breakout. And we see that by the rapid improvement in money flow. And of course, again, we had the positive swing in relative strength, and the power gauge was predominantly positive all year. So again, money flow also stayed very strong after the breakout, as did the other two indicators, and that can give you the confidence to stay with it after the first pause, which this one really didn't pause very much, but you typically get a breakout and then it settles back, tests the breakout level, and then goes again. So helps with the breakout, also helps having confidence on staying with the position after the breakout. If we go on to Alta, you don't just have to use these indicators in conjunction with price patterns. You can also use them for estimating whether a primary trend is about to change. In this particular case, Alta went up to a new high in June, and you can see that money flow was actually negative in that effort. So that's a warning sign. It doesn't mean the trend is going to break, but it gives us a lot more information than if we didn't have that indicator below there. It would simply be that whether it's on, if they have the analysts on CNBC or wherever it is, they would say new 52-week high, the stock looks great. It's going to, 350. All right, so you make a new high, you have a negative divergence in money flow. So all right, I'm going to wait. Maybe I'll buy it on the pullback to the lower band, or I'll see if the trend holds. Well, the continued negative money flow and then the subsequent flip negative in relative strength suggested that the intermediate uptrend was at risk of being violated. Now it didn't severely react because the stock was pretty oversold, obviously, by the time the trend line was violated. So it checked up at that May low. But that consolidation after the trend violation, they were not able to turn money flow positive or relative strength or the power gauge for that matter. So it may have been too oversold at that point to short, but it definitely had enough warning signs that you would stay away from that from the long side. And finally, if we look at triple D, Joe?
Let me see. Bear with me for 1 second.
Did I go too far ahead?
Here it is. Go ahead.
Okay. Triple D is another example of a, I didn't put the sideways base pattern in there with lines, but you can see that just about where the horizontal blue line is, just before that actually, we had a high volume breakout, money flow switched to positive. So we didn't have the leading edge of a breakout with money flow, but it was still useful because we got the confirmation of a big jump in money flow after the breakout. The problem, and we can estimate where that stock was going to go, because if you take the, again, it's hard for you to see, but if you take the range of the prior 6 months and add that onto the breakout level, it counted to about 22, 23. So that was our initial objective, and then we reevaluate when you get up there. We got up there, we stalled, so that made sense. We hit the target count. You pull back a third to a half, that's also normal. Money flow had a negative slope in the pullback, that's normal. The problem was when we had the retest of the highs. Obviously, not only did price fail to get above the prior high, but money flow barely budged at all. So at that point, prior to the subsequent breakdown, we still know that now we have a possible double top rather than just a healthy consolidation after that big move up. And so we have to be on guard for that. Eventually, the stock broke lower, power gauge turned negative, relative strength turned negative, money flow turned negative. If you didn't have the subsequent breakdown to look at, you would think, well, maybe it's basing there and it just needed one more flush out. But if you believe in these indicators, then you would know that that was not the case. That was a very feeble attempt to stabilize near 17.5, 18. And you would make this assumption with all three indicators negative that it was eventually going to be resolved to the downside.
All right, great, awesome. Okay, so we just saw some fantastic examples of how these indications can lead us to swing trade opportunities. So what I want to do now is I want to transition over into how we view a swing trade. I mentioned earlier we were going to cover the mechanics of a swing trade. And what we're here to do is identify really how we can spot these moves from, for example, from these low points to a high point. And we've talked a lot about entry points. What's really going to be emphasized here are really going to be your exit points. So going from here to here, for example. So with that in mind, our blueprint, our secret here for following this is what are referred to as Wyckoff patterns. Now, Mark showed me this content very, very early on when I started working him. has been working here, has been studying Dr. Wyckoff's work for a very long time. And Mark just so happened to develop a rating system that can spot stocks that follow this pattern. Now, what I want to focus on in this chart is the repeating pattern of, in the bullish case, higher high points. And that while this is the framework for a classic bull, for something where obviously I'm confirming a stock like AMAT, it's easy to look back and make sense of this. Hindsight's of course always going to be 2020. But when I find a stock that in this pattern, this enables me to, with the use of the power gauge rating, identify when an opportunity like this is about to occur. Not only its start, but using Wyckoff patterns and using this to identify an opportunity, to identify an exit point up here, knowing that this process of growth is not a smooth bell-shaped curve, right? Rather, it's more of a 3 steps backward, 3 steps forward, 1 step back type trend. So understanding that in mind, not only on the upside, but of course on the downside as well, is going to make life a whole lot easier. So now, as my colleague Josh has already guessed, he did get the stock correct. Our mystery bullish stock from earlier is Cigna. So look at this chart here. Look at this, just the price chart, and look back at the Wyckoff pattern here. Right, when you see this and you see this, this tells you that we're on to something. We're able to find these trends. And once you look at the trend up here in the price, the beauty is at the bottom of the page. Noticing the power gauge rating, again, going from neutral, where it was underperforming, to then bullish, and now outperforming. So this is a stock that's not just experiencing growth, but outperforming the overall market. And you can see a great surge of money flow early on. Now, eventually, money flow eventually flattened, and that's okay. But using an indication here, like the power gauge rating, will help you find these stocks as they go from one point to another, an opportunity to stick with it through earnings, and these opportunities that really begin to present themselves. Here's 3 examples. Just the ones right in front of me, triggering one of our oversold buy signals. I'm going to tell you more about the buy signals in a few moments. But all of these are acting as a second pair of eyes to help you spot opportunities. Now, something that'll help you from an exit point, I'm not going to go into some of these pretty closely, are spotting an overbought position here. And this is something that we emphasize a lot in our support sessions and a lot of our webinars. You can see as a stock becomes overbought, you can see that growth about coming to an end. And that, of course, is the end of the, I guess you could say, the 3rd step forward, as I mentioned. So again, 3 steps forward, 1 step back. If you can identify when that step back is coming, well, then that'll help you get out at the right point. Again, going back to the entries, when everything lines up here, noticing an oversold position on a bullish rated stock, you can get yourself set up very well and set up in a position that I like to think of as an ideal setup. Of course, we're all familiar with Warren Buffett. One of the phrases that I always keep in mind whenever I'm looking for opportunities in Chaikin, they don't call balls and strikes on Wall Street. What that means is that you don't have to swing at every pitch. If you limit yourself to just your pitch, wait for fastball right down the middle to swing at, not only is your win rate going to go up, but you're going to see those losses slowly begin to disappear. In fact, quite quickly instead. Something that I hear from a lot of the people that I've coached over time. A lot of the newer users come to me and say, hey, I've had success. You kept me out of a losing trade. In fact, it just happened yesterday morning. Another person who joined our program 2 weeks ago. This person in particular loves to trade Apple. And he said, look, I just want to trade Apple. And I thought that was, okay, bit of a unique strategy. That's fine. But he said, look, should I buy it now? Should I buy the stock now? And I said, look, if you look at the market, if you look at the stock being overbought, it's a great time to avoid the stock. And lo and behold, you saw the stock gap down pretty sharply yesterday. So just a very quick example that I just thought of as we were speaking right now, as waiting for the pitch, avoiding the curveball, so to speak, and waiting for the right opportunity. So Finding ideas. Something I wanted to dive into, of course, is by using our sectors. The stock we were just looking at was Cigna, our mystery stock. Well, Cigna, of course, finds itself closer involved to the healthcare sector. Now, on Chaikin Analytics, not only do we have domestic stocks, but we also have ETFs. Specifically, our sector ETFs help us find opportunities, find ideas. Cigna came along right around as the healthcare sector was beginning to consolidate and get itself together. Now, Cigna, by the way, I should have mentioned here, Cigna triggered a buy signal today, right? Just as it has time and time and time again. And you can see how easily we place the signals right within the program. What you're looking at is the list of stocks within the XLV, the healthcare sector. And I want to jump to Centene, but something I wanted to point to as well is the fact that Cigna here triggered a buy signal. But the beauty of the program is that you can quickly go back to find trends that are more broad trends and take a close look and see what other opportunities are out there. So looking at the healthcare sector, I mentioned that the healthcare sector began to come around earlier this year. Slowly but surely, you could see this trend of relative strength improve. And something that I like to rely on up here at the top is that power bar. This tells me how many bulls and how many bears are within the group. Now, the healthcare sector has really been out of favor since about 2015. But since that time, at beginning about this year, you started to see a resurgence. Chaikin Analytics, how we're going to help you find it, of course, is by using something like the power bar. When you see the presence of bulls versus bears begin to really improve. And what you're looking at back here on the healthcare sector is that you'll notice that ranked in order of the most bullish sectors, healthcare is right up here behind the financial group and above technology, telling you about future growth potential. So you saw this develop throughout the course of the year. The power bar really hasn't changed for healthcare throughout the course of the year. Slowly but surely, you saw this trend of relative strength go from negative to positive. You can see institutions were getting on board, more and more buying behavior. Buying, of course, for the most part, apart from a little seasonally weak time of year in August, but back to buying again in a very strong group. This, of course, can lead you to an opportunity here in Centene, which has been pretty volatile as of late. But if you look at it over time, a couple of great buy signals getting you in an opportunity. The same way that Cigna had that little green arrow appearing in the list is going to find opportunities like Centene. So again, stock going from neutral to bullish. We're going to play defense in a moment, but you're going to be playing defense, for example, on a stock like Centene about a year ago. Neutral rating, underperforming the market, no use to spend your time on it. Again, when you're looking at the healthcare sector, you may notice there's a trend developing. You don't need to spend the time going through tables and data and looking through all of those stocks within the healthcare sector. The power gauge rating has your back here. Avoid Centene about a year ago. Go with Cigna at the time. Eventually, Centene turns bullish, and look what it does. Underperforming the market to then now bullish and outperforming. Money flow, mostly positive. And of course, great swing trade opportunities presenting themselves. So just a great example of how you can use sectors to your advantage. Now, I mentioned that you would want to play defense on a stock like Centene about a year ago. And playing good defense is critical. Now, I'm stealing this slide from another presentation I would usually give on longer-term buying and holding, where we say, look, play good defense by avoiding bearish-rated stocks. Now, what I'm here to tell you is, obviously, with swing trading, you can benefit in one direction or the other. It's the awkward-looking stocks that you want to avoid, the stocks that you don't want to trade in either direction. And so I wanted to show you here one of the FANG stocks, Google. This is a stock that gets spoken about pretty much all day, every day. Maybe doesn't get as much attention as Facebook or as Apple, but Google is certainly one of the biggest stocks out there, and at times has done very well. You can see, especially during this April-May timeframe, where the power gauge rating went from neutral to bullish, relative strength negative to positive, fantastic money flow, and the stock does very, very well. Well, I want you to focus on where we are right now. In a bit of a sideways pattern, not a whole lot going on with money flow. Most importantly, the power gauge rating isn't bullish. And when you look at relative strength, you're about on par with the market, but even slightly underperforming. So we've gone through a lot of examples so far, and I want to test and see how everybody's doing so far. So I'm going to put up another question here. Oh, I got to turn my drawing tools off first. And the question that I have for you is simply enough, what would you do with Google right now? There's a couple of things you can do with Google. You could go with a bullish trade. For example, you could buy a call on it. You could buy the stock outright. Or you could go with a bearish trade. You could short it. You could buy a put. Or simply enough, you could pass on it. You could just go for something else. We've already looked at probably a dozen or so stocks so far. So I'd like to know what you think. I mean, after all, again, Google, I use Google products all the time. I'm very stereotypical, I'm sure. But surrounded by Google's name all the time. It's one of the best stocks, or has been one of the best stocks out there, one of the FANG stocks, of course. So I'm curious to know what you would do or what you wouldn't do with Google. So if you don't mind, take a moment, let me know what you think. Give me a response. I'll give you about 5 more seconds. I'd love to know and see how everybody's following along so far. Let's see, give it just a few more. I should probably say right now we probably have about 10 or 15 minutes left before we wrap up. And let's see what we got here. And sharing the results. Good. This is great. Seems like everyone's catching on very well. Pass on the stock. Is it a stock I'm going to buy right now? No, it's out of favor. I've seen plenty of other bullish rated stocks. John showed some great breakout stocks earlier on with those personality changes. So I'd rather find a stock that's neutral to bullish. And then right now, would I short it? I wouldn't really short it either. It's bullish to neutral, but I've seen plenty of bearish rated stocks so far. They're turning out to be much, much stronger. So much, much better for a short trade. So this is great. The 82% passing on the stock. Nice work. Glad everybody's following along. So let's go ahead and continue here. You've seen a lot of those signals. I just mentioned one for Cigna. And as a little bit of a pointer, I wanted to give you a little inside info. Somebody who works with Chaikin Analytics, I'm highlighting 2 of my favorite signals here. We have 6 pairs in total, but the 2 that I find that work best for swing trades, and you're hearing this just from me, are the oversold buy, overbought sells, and relative strength buy, relative strength sells. Now, obviously, they're all very, very valuable, but when it comes to swing trades, since we're here to talk about swing trades, talk about shorter term moves in stocks, these are the 2 that you're seeing mostly on today's webinar. Another example is that other mystery stock. I was showing the bearish one was Under Armour. Josh, I didn't get a response from Josh regarding what he thought it was bearish, but I'm sure he knew that it was Under Armour. If you look at Under Armour, you'd be looking at Under Armour several times this year in Chaikin Analytics because of how many relative strength sell signals you've gotten. Relative strength sell, hopefully if you own the stock, you would have sold it back then. If you didn't own the stock, then you'd be buying puts on it. Now, Under Armour, obviously it's an apparel stock. I'm sure we're all very familiar with it. I really like their sports apparel. I like to buy it and own it, and very, very comfortable. Of course, as the weather, I think the weather's going to drop on the East Coast at some point. I think it was about 90 degrees this weekend in September, so a little odd. But eventually, once it gets a little bit cooler out, I'm going to start wearing the warm-up stuff so I can still work out, go for runs up the Art Museum steps in Philly here. And I really like a lot of the athletes they sponsor, especially Jordan Spieth. Yeah, I watch golf a lot, and I think he's great. But as Mark likes to say about stocks like this, buy the clothes, but sell the stock. And again, you can see exactly why. Sell signals, especially this one back in January. Sell signal coming into play. A couple of weeks later, you go right into just a hammering of earnings here. Don't be on the wrong side of this. Don't bottom fish. And again, you can see yet another sell signal coming into play for a nice little move from 18 down to about 16. Not too shabby here. So especially in a weaker time for the overall market. So these signals, we're going to try to put them in front of you as best as we can. We want to make you aware of when these trends are developing. Again, I like to think of these signals as a second pair of eyes trying to help you out. You can see for a dashboard signals here. This is our dashboard view. It's very simple to toggle this and bring this up on your page. Just literally takes 1 click once you log in. It's a great example of how we like to bring ideas right to the forefront for you. This example is showing when a buy or sell signal occurs within a list. So we saw Cigna here. This is actually a dashboard view for the XLV. And here's Cigna triggering a signal. And you've got that listed here. So you can see all these buy signals taking place. And it just And it just makes me wonder, simply enough, why I would spend time on these bearish rated stocks. Sure, there's some signals here, but imagine looking in a weaker sector, how many sell signals there are there. So I'd much rather focus more on these bullish trends. And again, this is the benefit of using our dashboard here. So, okay. I'm going to go ahead and bring John back on. I just saw John's message. John, if we still have you here, I want to just make sure your volume's working, that your audio's on here. But we want to talk a little bit more about money flow and talk about the stealth distribution and buying accumulation patterns of institutions. John, do we have you?
You do. Can you hear me okay?
Yep. Yeah, we got you.
Okay, great.
All right.
Okay. Well, we talked about money flow earlier, and I just wanted to show you a few more examples of sort of a combination of things happening at the same time. In November and December, Allergan formed a minor basin, then broke out of it. Pretty typical. It went back to the prior resistance level, looks around 230, and then it formed what in theory is supposed to be a healthy consolidation triangle or continuation pattern, as they say. So the assumption is that it's going to reassert itself to the upside once it works off the overbought conditions. So what you want to be able to evaluate is, what are the institutions feeling or doing while this stock is in its consolidation phase? And as money flow shows, it was under mild accumulation. You may not want to preempt the breakout just on that one positive indicator, but it's still pretty compelling that it's leaning in that direction. We didn't have positive money flow yet. I mean, relative strength, and the power gauge was still a bit negative. And maybe you would go on to the next one to see if you can get all three indicators positive, and there's nothing wrong with that. But you don't want to short situations like this, especially if you're trying to swing trade, because price can go against you very sharply, very quickly in this type of situation with positive money flow, even if the other indicators are leaning towards the negative side. And then on the other end of the chart, we have the flip side. The stock went up and made a marginal new high, just above 250, a new 52-week high, and some people only buy new breakouts to 52-week highs. And they work a fair amount of the time, but you have to evaluate them. And in this particular case, although it's not marked, the new high had mediocre money flow. Also, when you make a new 52-week high, that's when you really have to be a little pickier about that neutral power gauge going bullish. So those two things was suggesting, no, I'm not going to buy that breakout. And then as it came back down to test the intermediate uptrend line, the yellow dashed line, money flow started, it was still negative, didn't get too bad. So you wait and see if it can hold that line. Slipped below it, and then could not get back above it. And immediately after it slipped below it, money flow got severely negative, relative strength turned negative as well, and so did the power gauge. So we didn't get compelling evidence that the trend was going to break, but we certainly got enough evidence to stay away from buying the breakout to a new high. So then the stock went into a consolidation phase after the breakdown, and it's the same drill at that point. Can we evaluate it? What does it look like? And obviously, as you can see from multiple examples we've already looked at, significantly negative money flow while the stock is theoretically trying to base. Relative strength is still negative, and so is the power gauge. And so that's when you can lean a little towards the assuming strategy and say, we're going to make the assumption that that's going to break down rather than up. With FBHS, just wanted to have another quick example of a very well-defined pattern. Now, again, as I said, there's a lot of stuff going on these charts that can be very confusing and tough to figure out. The key, as Joe said about not swinging at every pitch, is at least in the beginning, until you get familiar with the indicators, you want the fat pitch. And this is a pretty good example of a fat pitch. You have a basing situation where towards the end of the triangle, price is now hovering towards the top end of it. The bears can't get it back down to the lower boundary. That's That's a positive sign. You can obviously see that accumulation has increased significantly during that upper level consolidation. So you do get the breakout, you get the retest of the breakout level, and then money flow stays positive as it advances after the retest. Relative strength then comes along and confirms, and so does the power gauge. Those confirming indicators allow you to stay with the trade to get to the maximum count, and the count is the arrow. So the height of the pattern added on to the breakout level is the rough count that we shoot for. And then of course you keep evaluating and reassessing along the way. But you can have a higher degree of confidence in staying with that trade if the indicators are pointing in the right direction. And finally, Chipotle, similar situation. Trading sideways, mostly negative money flow, negative relative strength. So you just sort of leave it alone. If you wanted to be swing trading it between the bands, you'd lean towards selling the upper band tags, especially with the money flow being negative. But then you have a breakout, and the breakout generates mildly positive money flow, but it also flips relative strength positive. So 2 out of 3 positives means you definitely don't want to short that overbought situation. Which, by the way, is another way these indicators are very helpful. We all know that whether you follow RSI, relative strength oscillator, or stochastics, whatever you use for overbought, oversold, invariably they fail. And they typically fail when a bigger price pattern situation is taking over. So it's very important if you've never invested any time in trying to learn some of these basic patterns, and I purposely only used easy to draw, pretty easy to identify rectangles, triangles, basic support and resistance, basic trend lines. Please invest the time in learning how to do that. At that level, they're very easy to learn. You just have to put a little bit of time in, but it's invaluable, because when the indicators don't work, you can usually look at the chart and go, well, the breakout, it got overbought and kept going. I don't understand. Well, price broke out and it had a count much higher than the breakout level, and that's how you get into trouble. All right, in any event, in May, June, the stock, after breaking out, traded sideways, and again, we have to determine whether that's a healthy pause or something more diabolical. In this particular case, we had a little bit of what we call stealth distribution. It wasn't aggressive, but it was enough to just hang in there and wait. And then ultimately the stock broke lower, but tried to bounce at the trend line. So again, you stay away. And then it broke the trend line and couldn't get back above it. And we've seen that story before, right? Normally when it's that oversold and trying to base, they should be doing a hell of a lot better job than having money flow, making new 52-week lows along with relative strength and the power gauge. That was pretty much the kiss of death for Chipotle. You know, they worked through their initial issues, they took the stock up, and then once it rolled over, that was the end of it. The stock had no staying power and there was no conviction on the longs.
All right, great.
And I think that's the end of that section, Joe.
There you go. Great. Awesome. All right. Quick word before we move on. I use this as an opportunity to look through some of the comments and questions coming through. A lot of what you're seeing right now, of course, I guess all that exists right now are past examples, so to speak. But something I want to catch on to is a lot of what you're seeing are examples used as of today. And you can see the power gauge rating for all of these. Chipotle, perfect example, still has a bearish rating. With a power gauge rating, this is of course a forward-thinking indication. So when you're looking for opportunities, when you're seeing this presentation and analyzing some of these situations, with these power gauge ratings staying bearish or bullish, these are still opportunities to consider. So I know these are a lot of past examples. Of course, we want to show you how effective this tool can be, but just know that this is exactly what we're in the market for. So earnings season is not too far away here. Earnings for the third quarter begins in October. Volatility, of course, equals opportunity. We're not afraid of volatility here. So We've seen already a lot of great earnings ideas, a lot of examples so far, and how our Power Gauge rating can guide you to those examples, help you find new opportunities. Now at the bottom of the page here, of course, I'm trying to think of an illustration that can describe the volatility of earnings season. The only thing I could think of was some excitement from Philadelphia over the weekend. How about the excitement of a 61-yard field goal to win the game? There was another example using a football player on here. I decided to replace it for this slide because I think it's just a great example of the excitement, the quick opportunity that you can to make money. And this time of year is just around the corner. So for earnings here, John, for IBM. Let's see if I can get John back on here.
Okay,
John,
I'm here, Joe.
Yeah, sorry about that. Go ahead.
Didn't know you were going to get there that quickly.
Sorry. Yeah, sorry.
Sure. Okay, with IBM, you had an uptrend, and then you had a violation of the trend. So we didn't get a clue that it was going to break, or at least a compelling clue. But what we did get is a confirmation after the trend was broken. And that's, to me, as a technician, just as useful, because you're not always going to get positive divergence before price moves. But confirming indicators after something happens is also, very, very useful. So in this particular case, again, trend line break, try to stabilize, negative money flow, suggest to us that the stock's going to break lower. Now, it's doubly important if you see a dramatic swing in money flow from positive to negative within a week or two of an earnings report. And that's exactly what we had here. So it's, it's not guaranteeing that earnings are going to surprise to the downside. But obviously, even though the EPS designator is green, suggesting that they beat on earnings, well, they may have, but it doesn't tell you whether they beat by a penny or 20 cents, and it doesn't tell you whether they guided lower or had some other issues. So don't get mesmerized by whether the EPS designators are green or red. That's really sort of irrelevant. What you want to watch is price. And for whatever reason, the people with the most information, in theory, about IBM were not confident at all going into earnings. So that's, and then you can, with the system, you can set the system up to look for those divergences in money flow going into earnings, if you want to, if that's what you want to do, if you want to do strictly earnings plays. In Procter & Gamble, we have a sort of a situation where we have a combination of indicators, patterns, and earnings. So in November, December, January, we had what technicians call a cup and handle base, cup on the left, handle on the right. Okay, we had positive money flow prior to the breakout, so we lean towards breaking out, even though power gauge is still negative and relative strength is not good, which is going to happen if the stock's been in a long-term downtrend and then just initially basing. The power gauge and relative strength are not going to flip that quickly. You would look for confirmation, right? But in this particular case, it's also interesting that money flow turned positive, not only in the handle portion of the cup and handle, but it was right before earnings. So it gave us a clue to lean that way. Conversely, when the stock went up towards 92, 93, it made whatever you want to call it. It could be a triple top. It could be a head. I look at it more as a little bit of a minor head and shoulders top. When I'm evaluating that, when people call and say, well, what do you make of that? Well, I would tell them, sometime mid-April, that it's shaping up like a head and shoulder top rather than a constructive pause, because I don't like the way money flow has gone negative in the right shoulder. Relative strength is still negative. That's not compelling for a trade, but money flow with a divergence on a right shoulder potential top is. And so, and again, coincidentally, that money flow turned negative not only in the right shoulder, but right ahead of earnings. So that's a way you can use all three together: indicators, pattern, and try to tie those two things into an earnings play. And finally, and I'll run through this one quick because I think you get the point. Sideways consolidation, you get big money flow prior to the earnings breakout, So you could see that, because the important point here is not just that that they were betting that earnings were probably going to be better than expected and the stock jumped. What you eventually learn to do is have both the pattern and the money flow indicators and the other indicators working all in conjunction. So one of the reasons this stock gapped and then kept going is that it not only had good earnings and money flow preceding that, but it had a big 5-month base formation to break out of as well, which triggers a lot of technical buying. So if you can get all those three things on your side, you have a much greater chance of having more of an, possibly an intermediate trade versus just a swing trade, but you can still swing trade it and then get out. You can also do it on a slightly longer term basis.
All right, awesome. Okay, getting to the end here. So that about wraps up what we wanted to dive into here. So, now you know the keys to swing trading like an expert. What we've covered are classic bulls, classic bears, most important steps for finding those. You now understand the mechanics of a swing trade, and again, those indications that lead into one. We're going to improve your timing with our indicators. And as John mentioned earlier on in his first section, focus on the probabilities, the odds. I know you're not seeing percentage probabilities here, but that power gauge rating is that. Think about the back testing results for what we've seen. The absolute best testimonial that we've gotten here is from Ken here. Turned $235,000 into $1.2 million in 7 months. By swing trading and focusing on bulls and trading options. And all of this is fantastic. Trading stock options for many years with not much success. January 4th in 2017, found your system, started the year with $235,000. As of, I guess it'd be July 30th, my net liquidation is $1.2 million. I would have not been able to accomplish this with your system. So it's all about finding ideas. Now, how did we get this? Where did this come from? Well, something that we are extraordinarily proud of, something that, again, something I like to kind of stamp my name on, along with the rest of my team here, is our support program for webinars. The depth that we go into for our webinars, I really do believe is unparalleled. And it's tailored exactly to what people are doing in the overall. Because again, we truly believe your success is literally our own success. Now, the most important thing, the capstone is probably not the right term, but the very first thing is that your support begins on day one. We host something here called an onboard session. It's so important that we host it 3 times every week, and we always record the session. We know there's a lot of people in a lot of different time zones. We want you to access this content. This covers all of the features and functionality of Chaikin Analytics, understanding the power gauge rating, relative strength, the money flow, the dashboard that I showed you. We'll show you how you can access that. We're going to help you upload your portfolio to Chaikin Analytics as well. All of this occurs with a live Q&A session. So in the same way that you're chatting in questions, I know we have over 100 people on today's webinar. Our onboard sessions, we like to limit them to about 10 to 15 or 10 to 20 people usually, so you get every single question answered. And the most important thing, we're hosting these 3 times a week. We want you to attend as often as you'd like, or watch the recording as often as you'd like, because we want you to get up to speed as quickly as possible so you can find these ideas. That is our onboard session. The next one is taking place tomorrow afternoon. Once you've had an opportunity to do that, or check out a recording, if you subscribe to our program tonight, you can check out a recording of that tonight. Following that, we have webinars, not just for options, but a whole variety of other strategies. The main options courses that we host is all about our understanding option strategies, going from as simple as how to buy calls or how to trade complex credit spreads or debit spreads, you name it, all of that content is covered. We also host, I host specifically a Finding Ideas webinar, all about how do you find the next setup. Again, how can I find new ideas that, again, are obviously very similar to what we've seen before, but how can I set myself up for success going forward? How do I find the right type of setup? Well, that is taking place twice a week. The strategies one, if you're not sure about calls and puts or spreads or whatever it might be, that next strategies session is actually tomorrow. So again, we'd love to have you join us live. If you can't join us tomorrow, they're always recorded. You can even watch recordings of our past ones tonight if you wanted to. So again, these are just two other examples. Another one not shown here is an open forum session. I host this once a week with John Schlitz. So if you'd like what you've seen so far today, join John and I every Monday afternoon for a live update on the market, and really going through, like I said, in open forum fashion, any type of topic. Last week we did all about swing trades, so even more in-depth content than what you've seen here. The other, of course, is premium material. So that is available for our subscribers. Yesterday was all about screening for ideas. And again, of course, always providing an overview on the market from John. Finally, the most important thing, what we know is critical here, are one-on-one opportunities to virtually sit down with a member of our client success team, myself, Josh, David Shulin here. We make these available by request. Just send us an email, give us a call. We will schedule a time. If you sign up for Chaikin Analytics tonight, we will schedule a one-on-one session for you tonight as well. It's really that easy and that simple. No limits on this. There is no reason to limit your capacity for being successful. We wouldn't turn anybody away from a one-on-one. No, we're not going to do it, back days, but we're going to do it often enough so you can catch up on the material and be successful. And all of this is included in your subscription. So Chaikin Analytics, the overall platform, as you've seen here before, proven stock selection system. You've seen this already. Again, 20-factor model combining fundamental and technical factors, and also helping you find the right ideas, both by using our screener and by helping you find options ideas. We didn't have time to crack into the options content for today, but plenty more where that came from. So Chaikin Analytics, if you've seen our webinars before, you'll recognize that we just did a price increase, $2,195. You can subscribe to that chaikinanalytics.com/trades. Or by attending today's webinar, we're going to cut the price down to a webinar special of $1,795. Full year, 12 full months worth of access to Chaikin Analytics. It only takes a couple of days to get up and running. And of course, this is all available analytics.com/trades. This is going to expire on Friday. All right, so we don't want to give you too much time. The content here, it's time to take action now. You've seen how easy it is. I'm so confident each one of you could sign up for Chaikin Analytics and be effective in just one day. You can send us an email, sales@chaikinanalytics.com, or 877-697-6783. Think back to that example of spotting Google. Again, the majority of you knew that Google is just an example that I don't really want a whole lot to do with right now. And that's exactly how effective and how simple our program is, just by summarizing all of that content. All that's included here, of course, includes intraday charts, very, very valuable earnings content. Earnings season, again, is right around the corner. Don't get caught off guard. Don't find yourself caught in landmines. And then, of course, our Morning Insights newsletter from John Schlitz, as well as a weekly newsletter from Mark Chaikin. As a subscriber, just as a full summary, small group tutorials, those webinars I just spoke about, unlimited group coaching, the one-on-one sessions, and those newsletters, of course, also available. One last testimonial from another expert here, a great partner of ours, John Malden. My analysts are enthusiastic users of Chaikin Analytics and use it to analyze the trades and recommendations of our rating team, giving them feedback and insight of their own ideas. Mark Chaikin's system has been integrated into our routine due diligence process for vetting and evaluating potential investments. Very, very proud to have this partnership with John Malden and Malden Economics, so pretty critical here. One last thing. I said $1,795 earlier. I'm going to drop that down to $1,650 because you stuck with me and because I went a little bit overboard today, over time. But again, last chance offer at $1,650. We're not going to be doing this offer anymore going forward. This is it. This is it. $1,650 for a full year to Chaikin Analytics, everything you've seen. I'd love to have you join us. I would be extremely proud to work with you and to help turn your results around. Again, I'm sure many of you probably haven't, some of you out there probably haven't had a whole lot of success trading yet. But we saw just a fantastic earlier about how quickly you can be successful with Chaikin Analytics. Just by cutting out those landmines, being able to identify those and stay away, you will begin to turn your results around. And then, of course, we'll start talking about winners. But again, all of that is available with Chaikin Analytics. We'd love to have you join us. So want to thank you all very much for your time. John, if you have any parting words, feel free to chime in real quick. But again, we want to thank everybody for joining us. Thank you for the support from John as well. From Josh as well, answering a lot of questions. On behalf, of course, I'm John Schlitz. I want to thank you all for joining us. I'm going to turn it back over to Josh Midland for a final word, and we will see you next time. Josh?
Thank you, Joe. To take advantage of our offer, I have put the link in the chat box, so you can go right there and the discount code will automatically be applied. You can also call us at 877-697-6783. You can get started right away. You can be on the onboard session that Joe spoke about. We can have you up and running. We have one going live tomorrow. We also have them recorded, so we can email it to you right away. Joe also mentioned the option sessions. If you're interested in options, Joe and I do wonderful option sessions throughout the week that can help you find and understand high probability options trades with Chaikin Analytics. Thank you all for your time. Again, the offer is in the chat window, and you can call us at 877-697-6783. Thank you.